Good day, everyone. Welcome back. I'm Ruben Torrens, and I'd like to start this video by giving you a statistic from the government. More than 33% of Canadian seniors receive GIS, the Guaranteed Income Supplement. And I'm sure that a lot more will qualify if financial advisors and financial planners and insurance agents and whatever, or brokers, whatever you want to call them, receive more training in calculating government pensions. But unfortunately, we don't. Yesterday, I uploaded a video about an article that it was written by the Financial Post and published at Yahoo Finance. This is what I read the article. And it's about a reader of the Financial Post that is sent a letter asking a simple question. Well, not that simple, but asking a question regarding her retirement. This lady is retired, 68 years old, and she gives all the details of the money that she has, and a certified financial planner, the fee based, meaning this is a person that don't sell anything, gives financial advice for a fee, make recommendations based on what is learned in courses and training seminars that we take, but none of these include a deep evaluation of government pensions. The end result was that when I restructured all this, taking government pensions as a priority, I increased the total amount of the lifetime income amount by almost $48,000. And this is not by certain investment, it has nothing to do with investments or anything else. It has to do with the money that this person has restructuring. This person has money in RRSPs, in tax-free savings accounts, and in cash, and restructuring everything in such a way that will maximize government pensions. What is the problem? Why this happened? Well, let me tell you my experience. Since the beginning of my career, I started in this business in March of 1986. I have attended hundreds of training seminars conducted by insurance companies, banks, mutual funds, all the financial institutions. And most of these seminars, if not all, they involve case studies to show a product that these companies offer or a strategy. But all these examples are shown taking wealthy Canadians as examples. Then the tens of thousands of brokers like myself sell these strategies to average Canadians, and boom, everything explodes. So it doesn't work. And in other words, you end up not getting the type of income that you should be getting. So then when I find out all this, I learned how do these pensions work. In the 1990s, I needed to learn more, and I enrolled with the objective of learning more about these pensions. I enrolled in the Certified Financial Planning course, in the CFP course. And this is an amazing course. I'm not going to discredit this course. But once again, it fails to care for what is level, for the people that is level, because we label people as lower income Canadians. And what happens to brokers? We sell financial products. We live out of commissions, and most brokers, they want to specialize on the higher income Canadians, not on the lower income Canadians, because eventually we make more money. So that is the problem. But is it possible to learn all this? Of course it's possible. I did it. And the information is available online. The government has all the information available. Difficult to find sometimes and difficult to figure it out. But, well, yeah, it's the government. You cannot expect them to be perfect. So what I did was I created this series of calculators in Excel that can easily calculate the value of government pensions, including the GIS, and it can help you determine things such as if it's better to save in RRSPs or TFSAs, one of the things. So I will show this with you very shortly. But first, I'd like to tell you my own experience, what happens to me. When I had all these calculators ready, I approached several directors and VPs of different companies. I'm not going to name the companies. This is not about pointing my finger on anybody. but with this idea, the idea of saying, hey, guys, this is what we can do. Look, we can plan effectively for what we call lower income Canadians. It's, and their answer, when they show them all this, their answer is always the same. They say, how do we make money with it? And when I said that this is to offer a better and more efficient service, they say, nah, we're not interested, Ruben, just offer it to somebody else. So yes, it is frustrating, and now I want to create. My objective is to create a website to post these calculators and explains the functionality on a series of videos. I thought that it was going to be a lot easier to do it, to make them user friendly, because when I did these calculators, I did it with advisors in mind, but they're a bit complex. But I'm working on it. Actually, as a matter of fact, I'm progressing slowly, but surely. And on Sunday night, because my Excel expert is in the Philippines, on Sunday night, which is Monday morning at the Philippines, at 10 p.m., I'm meeting with this person online. So Sunday night, I will end up going to sleep around 1, 2 in the morning. So, but enough of feeling sorry, and let me show you how the calculators work. These calculators covers absolutely every possible situation because they're based on the government rules. And there are a total of 5 different scenarios. This is scenario number one, which is for a single person, a widow, or divorce. It's a single person filing income tax as single. And the first field up here, this number 40, represents the number of years of Canadian residency between age 18 and age 65, and that will determine the amount of the old age security pension, this amount here, and which is with 40 years of Canadian residency, you can receive in July, August, or September, $666 from old age security. And if that is the case, and there is absolutely no other income, everything else is in zero, then the guaranteed income supplement here will be almost $1,000 per month, $995. Now, look what happens if there is less than 40 years of Canadian residency, because you qualify partially with 10 years, and then with 40 years, you reach the maximum. Let's see what happened with 20 years. We enter 20 here, and now the amount of the old age security pension gets slashed on half. Now it's only half of the amount because it's half the time, but the guaranteed income supplement, that this amount increases. So the total government pension is the same, but most cases they are 40 years. For now, we're going to leave it at 40, and and see what happens with the rest. Now, what happens here is, besides that, you also may have Canada Pension Plan. When you have your statement of contributions or a pension estimate from Canada Pension Plan, you can enter the number here, and say Canada Pension Plan tells you that, I don't know, you're an average worker and an average Canada Pension Plan is about $700 per month. So we enter 700 here, and look what happens to the guaranteed income supplement now. It reduces to $513. And let's say that besides that, you have RRSPs and you will withdraw from your RRSPs, say $1,000 per month. Okay. You entered 1,000 here, and now your guaranteed income supplement disappeared completely. So you pull in $1,000 of RRSPs and you lose $512 of guaranteed income supplement. And here it goes. You can also have employment income and see what happens with your employment income. I'm not going to get into that. I'm just going to give you an idea of how the calculator work. Because, for example, if instead of getting $1,000 from your RRSPs, and say for instance, you have $0 from RRSP. You're not taking anything from your RRSPs. You have $512.99 of guaranteed income supplement. But here we have tax-free savings account. And what happens if instead of getting $1,000 in RRSPs, you say you get the same $1,000 or whatever amount from the tax-free savings account. Well, nothing happens to your guaranteed income supplement. It remains the same. So that means that if you are this type of individual, that you will save, you doubting between saving between tax-free savings accounts or RSPs, well, here you have the answer. Tax-free savings account, you have an advantage. But this is very, very, very basic what I'm showing you right now. So later on, when I developed these calculators to a user-friendly format, they will be embedded in a website. So with a series of videos, I will show you exactly how each and every one work. And from now on, I will start using the calculator more often, so you get familiarized more with the system. And this way, you will be able to stretch your retirement income. But this is for a single person. If you are married, with both spouses over the age of 65. Here we have the calculator for that, and it's the same thing, but for both spouses. And then we have another one for a couple in which one partner is age 65, applicant one is age 65, while the applicant two is under the age of 60. So is younger than 60, 59 or younger. Then we have calculator number four. In this case, we have one partner over the age of 65, and the other partner, the other spouse, between age 60 to 64, because by the time they're both over the age of 65, we're going by here to the calculator number two. And then we have the last one, which is what the government interpreted this way, which is for a person that is a widow, is an allowance for a survivor between the age of 60 to age 64, because by age 65 will qualify again as a single individual for guaranteed income supplement. All this sounds like a very complex, and but it's not that bad when you see it working on a case study, and I walk you through it slowly. In any case, in future videos, I will walk you through every calculator, and I will also get back to the last video, the case that I was published by the Financial Post, and I will recalculate that as if this person happens to have one of these calculators before retirement, and you will see how that income increases even higher, even farther. So we're going to get more money for this person. So make sure that you subscribe to the channel. You don't want to miss this. This is important. It's money in your pocket for most people. And other than that, thank you for watching. And thank you for your time. And I'll see you soon.